Canada Pension Plan Investment Board, we are investing for generations. We're pleased to present our second quarter fiscal 2020 performance results, as well as our fiscal year-to-date results at September 30th, 2019. This presentation may include statements which constitute forward-looking information, including plans and current expectations of CPPIB with respect to the future business activities of the organization. First, let's take a look at our financial results this quarter. The fund continues to post steady returns that are adding up to meaningful investment performance over time that is helping to grow the fund. As September 30th, 2019, CPPIB reached $409.5 billion in assets. This reflects a net increase of $8.9 billion compared to the previous quarter, and $17.5 billion year-to-date. The fund's net increase of $8.9 billion in Q2 was driven by $9.2 billion in net income. For the quarter, CPPIB delivered a steady 2.3% net return. The total fund of $409.5 billion is made up of two accounts. For the base CPP account, net assets were $408.3 billion. For the additional CPP account, net assets were $1.2 billion, surpassing $1 billion this quarter. In January 2019, CPPIB began managing the additional CPP account, which is expected to continue to steadily grow over time. The expected growth of the two accounts reinforces the strength of the CPP as a key pillar of retirement savings for Canadians. As an investor with a long-term view, the 10 and 5-year returns are what matter most to us. At September 30th, 2019, net nominal returns for these longer periods were both above 10%. This translates to net income for these periods of $239.5 billion and $154.4 billion respectively. In quarter two, CPPIB continued to deliver steady returns. Our investment teams remain focused on opportunities to create future growth while diversifying the portfolio. Primary drivers of this quarter's return were positive performance from both our private and public investments. Among the active investment programs, the largest contributors to performance were private equity and active equities. Lower interest rates in the US and Europe helped lift our fixed income portfolio, while modest gains in global equities boosted our passive equities portfolio. We are now halfway through our fiscal year. For the 6-month period to September 30th, 2019, the CPP fund increased by $17.5 billion, consisting of $13.4 billion in net income after all CPPIB costs, plus $4.1 billion in net CPP cash inflows. The portfolio delivered a net return of 3.4% after all CPPIB costs during the half-year period. Here are our operational highlights as of our second quarter of fiscal 2020. In early November, we published our 2019 report on sustainable investing, demonstrating our increased focus on identifying and addressing environmental, social, and governance factors. These factors are key drivers of long-term value for investors. One of our focus areas is strengthening corporate governance at companies we invest in, such as promoting board effectiveness. We believe gender diversity brings important and more diverse perspectives to the boardroom, ultimately driving the profitability of companies with diverse boards. This involves improving the gender composition of investee companies' boards. Through our proxy voting, we are advocating for an increase in the number of women on the boards of these companies. We vote against the director who chairs the nominating committee at our investee public companies if the board has no women directors, unless there are extenuating circumstances. For the 2019 proxy voting season, we voted against directors of 626 companies where there were no women directors. The majority of these companies were in Asia Pacific. Our sustainable investing initiatives help us improve long-term investment returns for Canadians, particularly true for investors like us with exceptionally long holding periods. Let's take a look at the portfolio mix at the end of our second quarter of fiscal 2020. All of our investment groups actively pursued attractive investments around the globe this quarter. Here we see the assets under management, broken down by each investment department, as at September 30th, 2019. As mentioned earlier, broad diversification of the fund by asset mix is the core of our long-term investment strategy. Diversification is the most powerful way to boost investment returns by understanding the underlying return risk factors for each investment program. Here, we see the fund's asset mix at September 30th, 2019. Diversification by geography is equally important for the fund. At the end of Q2, the fund was broadly diversified globally across regions. Looking ahead, the fund remains well-positioned for long-term global growth. The fund's assets are projected to grow to $545 billion by 2025 and to $1.5 trillion by 2040. For more information about CPPIB, we encourage you to contact us. Thank you for reviewing our fiscal Q2 highlights. CPPIB remains committed to investing for generations, serving the CPP's contributors and beneficiaries.